Ladies and gentlemen, a very warm welcome to all of you in the fourth day of the India Impact Investing Week. This is Ramraj Pai. I'm the Chief Executive Officer of the India Impact Investing Council. As you're all aware, we are on day 4, and I must admit that we were all having a little sense of curiosity, in fact, even apprehension in terms of how the response would pan out or over an event which is a week long. But I must say, and I'm gratified that the response and the feedback has been unprecedented. Here are some statistics which I'm sure will interest you. We've had 800 plus registrations to the event, 550 people attending till last evening across 20 countries. All of these are unique individuals, so 550 unique people. Plus, we've had more than 250 people who attended all the 3 days consecutively. An average session has had an attendance of more than 150 people plus. We are deeply gratified, I must say, at this response, and we are thankful for your support and encouragement for our event. We've had some excellent sessions over the past 3 days. The sessions on day 1 started off with a broad overview of global and domestic impact investing trends. The last 2 days got into a deep dive into specific sectors like agriculture, financial inclusion, and livelihoods. We've also had an extremely interesting session on debt financing and impact, which saw lots of interest and lots of questions across the board. Today is our 4th day, and we have another interesting set of discussions coming up. We have 2 excellent sector deep dives, one on education and another on financial inclusion. But looking at financial inclusion not from the traditional lens of loans and lending, but looking at financial inclusion beyond lending models. What are the new spaces opening up, especially in areas like insurtech, savings tech, wealth management for low-income households, and so on and so forth? We also have an excellent session on building the market for pay-for-performance structures and what needs to be done to scale that space. Last but not the least, we'll also be launching IIC's 3rd research report for the year on impact management practices in the Indian impact investing industry, undertaken in collaboration with our partners, KPMG. We have a special session to discuss the report with a galaxy of impact management practitioners from across the world. And we hope that is an interesting session for all of you. Now that my opening spiel is done with, it's my pleasure and absolute privilege to introduce to you Jennifer Pryce, our opening keynote for the day. Jennifer Pryce is President and CEO of Calvert Impact Capital. For nearly a quarter of a century, Calvert Impact Capital has strived to make markets work for more people, more often, by investing in communities overlooked by traditional finance. Calvert Impact Capital invests through organizations that on-lend to people and businesses in the US and over 100 countries. In 2018, the organizations in their portfolio provided nearly $5 billion to finance everything from solar home systems in Tanzania to small businesses in Texas, and also obviously their presence in India. Over the past decade, Jennifer has shaped the strategic direction of Calvert Impact Capital to focus on innovation, sustainability, and scale. Under her leadership, the organization has expanded the sectors it works on, developed new products and services, and committed to sharing their knowledge and expertise with the field on key topics like gender lens investing. Calvert Impact Capital remains committed to ensuring impact investing is accessible to all investors, large and small, having worked with more than 16,000 individuals, institutions, and advisors to raise over $2 billion since their founding. Jennifer began her career in the Peace Corps, where she taught math in Gabon. Very, very interesting. I must say, this was a very interesting piece, which I hadn't sort of thought about. She had then worked as an equity research analyst for Neuberger Bergman and on the investment banking team at Morgan Stanley's London office before joining the Public Theater in New York City and leading the Washington, D.C. regional office for the nonprofit finance fund. Jennifer studied engineering at Union College and holds an MBA from Columbia University. She currently serves as a Forbes contributor, a lecturer at Oxford Said School of Business, and the advisory board chair of Quantified Ventures. Calvert Impact is also one of the early investors into the Indian impact space and is also an investor into the recent debt fund raised by one of our members, Northern Arc. Over to you, Jennifer.
Thank you. Am I on? Am I on mute?
Yeah, no, you can speak, Jennifer. We can hear you clearly.
I can speak. Thank you.
Yeah.
Thank you for that wonderful introduction, and good evening, good morning to some. It's a real honor and a pleasure to be with you today. As introduced, I work at Calvert Impact Capital, and for 25 years, we've been striving to introduce investors to impact investing, to enable them to invest their assets for both financial and social return. And what I wanted to talk to you today about was how we can scale impact investing with integrity and also speed that this moment requires. As mentioned, I'm a practitioner. I work in the markets, and I bring US capital into emerging markets. So every day I have one hand in the capital markets, talking to advisors, talking to financial institutions, and another hand in communities, understanding the needs of communities, both the capital, the technical assistance, what's stopping the communities from flourishing. What I've noticed sitting in the middle of these two conversations is both markets are functioning very well, but they're not meeting in the middle. That the resources, the money that the capital markets has is not making its way into communities, and the benefits that we see in building resilient communities, how that benefits us all collectively is not coming back up. And so one of the things that we see can really be a catalyst here is unlocking the private capital that sits in the capital markets to help it reach these communities and really scale and grow impact investing. Today, I wanted to just share three things that I've observed that can help facilitate this unlocking of capital. One is infrastructure, two is education, and three is impact measurement. We've been around 25 years, as mentioned, and over those 25 years, we've been working with investors, bringing them products, bond offerings, simple products that they can then incorporate into their investment portfolio. I'll say I'm a big believer of the simple is better. My experience has been that capital markets does not like innovation. It rejects innovation and it likes what it knows. It prefers what it knows. And so again, who we're trying to work with are these advisors that sit in large banks like a Goldman Sachs or a Citigroup. They advise client assets. They can be individuals that are ultra high net worth clients or even mass affluent, or it might be institutions. But collectively worldwide, there is over 100 trillion of assets sitting in these advised accounts. And this is what we're looking to unlock. What we found that to unlock this capital, that it's necessary to meet the needs of investors. And the needs of investors are characteristics like they need liquidity. If they want to get to cash, they need to get to cash. They want risk diversification. So as much as they would like to invest in India, many US investors, European investors do not want a whole portfolio of Indian investments. They need scale. They would like to invest 10, 20 million. If it's an institution, they don't want to be more than 10% of the full offering. So that offering needs to have scale and risk diversification. Buying one business can work for some people in some cases, but for many people, having a portfolio of diversified, many investments is much more appropriate. And so what we have found for us as a business to meet these needs of investors, the capital we're trying to unlock, that we seek to invest in intermediaries and funds. And those intermediaries and funds where we lend our capital then on lend to funds or businesses or projects in country, in the markets that we're ultimately seeking to reach. In India, for example, a few of our investments is Varthana. Many people might know them. They're an education, they're a lender to private school owners. The capital they provide helps these schools build infrastructure, advanced teacher training, and technology in the classroom. Another investment we have is Intelligro. They're a lender, flexible, innovative lender to small and medium businesses. Both of these entities are examples of intermediaries that have the scale, the size, and the track record to carry our capital into the country and then into community. So that financial plumbing, that infrastructure, investor to advisor, advisor to a capital raising intermediary like ourselves, Calvert Impact Capital, to a capital, to a deploying intermediary like a Varthana or an Intelligro I mentioned into community, that financial infrastructure is really playing a very important role to unlock a dollar that sits in Goldman Sachs and enable it to travel to Delhi. And this financial ecosystem is vitally important to unlock private capital. As I look at India, and we lend into over 100 countries from Calvert Impact Capital, the money we manage out of the United States, India has one of the most well-developed financial ecosystems, especially in financial inclusion. But where there are gaps is in areas like education, in health, and in other sectors. And those gaps really inhibit the flow of private capital coming into the country. For our capital to come, because we don't have people in the country, all our people are in the United States, we really need intermediaries of size that have track record and scale and can carry debt into the country and then into community. So, as we think about really growing this opportunity, we really need to think about educating, opening up the infrastructure. The education piece is really about how we see that investors face common challenges. Some of those challenges are technical, so there are platforms or technology or operational hindrances that prohibit their capital from moving into the country, or it could be the regulatory framework that doesn't really support an investor considering investing in an impact investment. Also, models that portfolio managers or chief investment officers may use to select their investments oftentimes don't look at impact investments, the impact, the track record, the size of these types of investments in a way in that it makes for a good recommendation to their client. And some of the basic needs of just investor education and distribution of products of impact products are lacking. These are some of the challenges beyond just the infrastructure being built in the country that is holding private capital from coming in. And we really need to collectively break through these challenges to really bring in scaled capital. In my opinion, we cannot continue to rely on fundraising one investment at a time, one high net worth individual at a time. We really need to open some of these scaled opportunities, which really causes us to invest in infrastructure, education, as well as products that both meet the investors' needs as well as the needs in communities. Education also is something in itself that I think is very important to think about how we can all contribute to. And education, not just around why impact investing, but how. How can you do impact investing? And I'll share our journey around gender lens investing as an example. Back about a decade ago, we took a moment and looked at our portfolio and saw that we had been a gender lens investor by the nature of the work we were doing over our 25 years. At that time, it was 15, but it wasn't a formalized process. It wasn't one with integrity. So about 10 years ago, we created a gender lens screen and we began to formalize our gender lens process. In that process, we screened in a subset of our investments. And for a number of years, this smaller portfolio that we called our gender lens portfolio, we measured the impact our investments were having on gender. What we woke up and realized one day is all investments have a gender impact, whether it's positive or negative, that gender does not live in a silo. And so we opened up our gender lens across our whole portfolio. And from about 2012 onwards, we began rigorously collecting data. In 2019, we created a qualitative report looking at all the data we had collected over time, financial and impact, of all the investments in our portfolio, over 1,100 investments at that time. what we saw is those companies that had a gender lens, a robust gender lens, also had outsized financial performance, that there was a correlation. We brought this report out to the market and educated investors about this hidden alpha. And we also educated fund managers. We took the time to work with a lot of fund managers to share how they could incorporate a gender lens so they could maximize both the impact and the financial return of their investments. Move forward just more recently, we've worked with a lot of our partners on the 2X challenge, helping inform their gender metrics, and the 2X challenge, which now has collectively between DFIs, private capital, and public resources dedicated about $4.5 billion to gender lens investing. So reflecting on this decade of work, at the moment in time, we did not have a plan of how we were rolling out this work. But in reflection, it's clear that what we did was demonstrate, educate, and scale. And I think that's a good recipe for asset owners, asset managers to consider. As we think about the opportunity to educate, it's one that we all, I believe, need to take on. There's a pie that can only grow bigger. We know that there's an amazing amount of capital sitting on the sidelines. We know that there's enormous need in our communities. It is not a win or lose situation. To educate and unlock more capital collectively can only grow the pie for all. And I once, I'm reflecting, had a predecessor who ran Calvert Impact Capital before me, and she used to have this phrase, let 1,000 flowers bloom. I think it's appropriate here to think about how we can all collectively grow our field. The last opportunity I see is impact measurement and management. And I've heard IC state that this is really a key defining feature of impact investing, and I couldn't agree more. A first step, which we're all undertaking now, is to get alignment around impact measurement, impact standards, impact outcomes. The next is to leverage that to really raise capital. And thinking about that now as we're putting the wheels on the truck, so to speak, is important. Two things. One is we need to build a credible tool so investors can look at impact across different investments and be able to compare. And second, we need to report out on impact to investors in a way that's simple. I've noticed that investors, because of what they're doing and how they do their work, have a very limited bandwidth for reports. They need something simple. They need something that's very easy for them to understand and digest and share. We recently signed on to the operating principles for impact measurement and management. And this is a global effort. It's something that we see could really change and accelerate the idea of a credible tool, reporting, and leveraging outside capital. It's not about impact standards. It's really about supporting impact managers and asset owners, creating an impact measurement and management framework so that there's the ability to understand the impact of the investments from entry to exit. And also important is a verifier, a third party, to show transparency. I think the opportunity to really grow and expand the signatories, participants in the operating impact principles is real. As we turn to this moment in time, I just wanted to leave with one reflection. With COVID-19 and the economic fallout that we're all working to address in our different ways around the globe, three things. One is, I really believe we just can't rebuild the system we had. A lot of the communities that we're seeking to put money to, or the climate that we all share, restoring it to what it was won't be enough, especially communities that have been underinvested in for generations. Thinking how to build back resiliently is extremely important. And this effort, what I've noticed, takes collective action. We've been involved in recovery efforts in the United States, in particular, bringing capital to the smallest of small businesses, ones that have been left behind by the government and other public resources that have been put out into community to support the recovery efforts. And it is this collective effort at times with urgency, everyone doing what they can in this moment of time to make the capital move to change the system that we're in, has been really quite inspiring. And it's that collective action, that urgency at this moment in time that I think is one of our greatest assets. And so with that, I leave you and hope that you all have a fantastic rest of the evening or day, and best to you. Thank you, Ramjad. It's been a true pleasure.
Ramraj, you're on mute.
Sorry. So I said thank you, Jennifer, for your kind words and your excellent perspectives on how we need to all work together to making changes. We are now coming to the end of this keynote. We are going to start 2 parallel sessions with roundtables. So all of you who want to be part of the education roundtable, you can come on. We are in Audi 1. That's the education roundtable. And for the financial access going beyond lending models, for that roundtable, we are in Audi 2. So, people can make their choice. You want to continue here in Audi 1 or in Audi 2. That's up to you. Thank you again, Jennifer, and have a very good day. Thank you.